Let me just get started with the big news right now, the ongoing geopolitical tensions both in Europe and the Middle East now. Are you seeing any impact on your business?
No. Well, good morning. The answer to your question is no. I think the move we've seen in oil prices is pretty indicative. I think since the beginning of the conflict, we've seen about an 8% increase in oil price. I think that gives you a sense that the markets are reacting, but not so dramatically. And I think if we compare that to what we saw in the Russia-Ukraine crisis, we saw an uptick and then, of course, a fall off slightly following that. So right now, I think it's business as usual in the energy markets. We'll see what the week does this week, but right now it's looking pretty stable.
The Ukraine crisis, as you mentioned, has led to more inflationary concerns and rising prices, right? Have you seen that affecting your construction costs? What are you doing in order to mitigate the risk?
So for Tellurian, if I'll speak for our project, we have what's known as a lump sum turnkey contract with Bechtel to build our driftwood terminal, which means that all our costs are contained with one estimate. Now, of course, the industry has seen inflation, as we've seen across the globe in many sectors, not just in energy, not just in construction. But of course, by managing it with a blue chip contractor like Bechtel, someone that my co-founder Shery and I have worked with over many decades, we have a lot of confidence that our project will be built on time and on budget. But of course, in the sector, we are seeing some inflation. I think it's important for developers to make sure that they have quality contractors with with strong balance sheets, able to take the risks on these mega projects. These are very, very large pieces of infrastructure which are developing new sources of energy for the long-term energy security that we're all looking for, alongside the energy transition that we're all hoping and striving for as well.
Do you have many, or how many buyers do you have, though, that are willing to sign really long-term contracts of around 20 years?
Well, we're working on our portfolio of buyers as we speak, but I think if you look across the industry, you've seen a large number of buyers willing to commit. And I think the trend post Russia-Ukraine has been that we're seeing longer-term contracting. We've seen contracts as long as 27 years signed for long-term supplies of LNG. And I think that's important as we look at the energy mix going forward, where gas is going to be a crucial part, a crucial partner of renewables in the energy transition. So I think we're seeing a move to longer-term, longer-dated contracts as people recognise the need for gas on a long-term basis. I think the notion a few years back was that the energy transition would see a runoff of hydrocarbons much earlier. Of course, that's never been the case. We are going to be consuming certainly gassy hydrocarbons for a long time to come. And therefore, people recognising that are making those long-term commitments and contracts, particularly as they look at the competitive forces that ultimately will arise as you see growing demand and shrinking supply, both on the oil side, on the gas side, as regions, Europe on the one hand, and let's say Asia on the other hand, are competing for those same sources of supply.
So what's your outlook for gas prices, and what sort of profits are you generating from the rigs that you've got in operation now?
Okay, well, we're seeing pretty stable US gas prices. Remember that we're a producer of gas from the Haynesville onshore in the United States. We see prices range bound, I think, up to about $3.50 per million BTU. I think what's important is what happens in the buyer markets, what happens to JKM and TTF prices, particularly if we have cold winters in Europe and either separately or at the same time in Asia, because that will impact significantly the demand. And whilst we have relatively full storage in both continents, it will affect the prices at the end user markets, and we could see prices run up as we saw last winter. It's a very high prices. $25 per million BTU would not be out of the question in a cold winter situation in one or other of those two buyer markets.